Hi everyone, welcome to another weekly Forex Forecast. My name is Justin Bennett with Daily Price Action, and in today's forecast, we've got the EURUSD, the Pound USD, and I've also got some yen pairs lined up, including the dollar yen, euro yen, and CAD yen. I do think those yen pairs have a lot of potential, including the Canadian dollar versus the yen, so you're going to want to stay tuned. Let's get started right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. Before we get started, be sure to hit that subscribe button below and also click the bell icon so you get notified every time I post these videos. Alright, first up is the EURUSD, and this was a big week for the pair because notice how it broke free finally from this descending channel. And if you've watched some of my recent videos, you know that we've been talking about this channel for several weeks now. And Thursday's candle did spike above the level intraday, but it failed to close above it. So if you read last week's post, I said that it would all come down to the daily close. And notice how that Thursday candle did not close above it. However, so here was Thursday's close. However, look what happened on Friday. The euro finally managed to close the day and the week above this resistance level. So keep in mind too that this recent bounce down here at 109, so this bounce right here and even this one occurred right at this descending channel support level that we've been talking about for several weeks. So notice how the EURUSD has carved this broader descending channel that dates back to 2018. So we had this candle's low as well as this one back here. And fast forward to the last few weeks, you can see how the euro has caught a bid right around that 109 area. So the reason this is important is because I have been saying for several weeks that I do believe the EURUSD has more room to the upside than downside. And that's not to say that it will move higher, but if we just look at the price action here since 2018, within this channel, and I draw out these swings, notice what's happened. So this latest bounce is right at the range low of this channel. So we had a swing low back here, swing high, swing low, swing high, and this right here is a potential swing low. So as long as buyers can get behind this move this week, we could see the EURUSD push up higher over the next few weeks and maybe even months up toward 112, perhaps even back to this channel top. So if we dive in a little deeper on the daily time frame, what I'm looking for this week is I want to see buyers defend that 109.90 area. So again, we had Friday's close above it. So this level that had been serving as resistance now becomes support. And notice too how 109.90 is one we've been talking about now for quite some time as a horizontal key level, and that lines up right with that former channel top. So the intersection of these two levels give us a confluence of support that we're going to want to keep a close eye on. I also believe that 109.90 is a must hold for buyers. All right, if we see the euro close the day back below this area right through here, that would be a sign of weakness and could re-expose this low and perhaps even the 109 area. Okay, so 109.90 is a must hold for buyers, and on the way up, I do believe that 110.70, so just above Friday's high, notice all of these lows back here through July as well as August, and this level then flipped to resistance and rejected the euro throughout September. So 110.70 is going to be a key area to keep an eye on as resistance. However, if we do see a daily close above that, we could see the EURUSD move up toward that 112 area that I've also been discussing for several weeks. So notice lows through here, and we have several highs through this area back in July and August. So as long as buyers can keep the euro above 109.90 on a daily closing basis, I have to respect the potential for a move up to 110.70 with a break there exposing that 112 area. On the other hand, a daily close below this confluence of support could re-expose this swing low and perhaps even the 109 region. Next up is the British pound versus the US dollar, or GBPUSD. And this thing put in a big time fake out last week. So notice how we had this close below ascending channel support. However, Thursday's candle rocketed higher, closed the pair not only above channel support here, but also that 123.80 horizontal level that we've been talking about now for quite some time. So this close on Thursday was a big time signal that buyers wanted to take the pound higher. So as soon as this closed, we knew that this area would begin acting as support once again. And it didn't even make it that far south, and instead broke above 125.70, which is another key level that we've had our eye on for some time. So if you recall from my video a few weeks ago, you know that 125.70 is a little bit tough to identify on the daily time frame. So if we go back here, you can notice how 125.70, this level right here, the pair sort of chopped around this through this area. But if we go to the weekly time frame, you'll notice how well the pair has respected 125.70. So on the weekly chart, notice these candles never closed below it, and same thing back here. It served as support, broke below it on this candle, and then the level started to serve as resistance and attract sellers. Same thing on this candle. Look at the high right here. So for the week ahead, I do expect buyers to come in and try to defend that 125.70 level. Now, as for key resistance on the way up, if I go back to the daily time frame, the next level that is on my radar is going to be that 127.70 area. So notice back here, there's no doubt about this one. Notice this low and then these highs through this area. So 125.70 is going to be a key level to keep an eye on. But again, I do think that if buyers can come in and prop up the British pound against the US dollar at 125.70, this could present a buying opportunity for that move up to the 127.70 region. Alternatively, a daily close below 125.70, so this level, a daily close below it, would re-expose that ascending channel support, perhaps somewhere around 124.50. And last but not least, as bullish as the British pound looks right now, keep in mind that the trend here for several years now has been lower. So even this short-term trend has been lower. So this may just be a correction before we see that next leg lower. But don't count this one out either, because we could see that push up to 127.70 and perhaps even higher than that over the next few weeks. But again, the overall trend here is still pointed lower, so keep that in mind if you are buying the British pound. The dollar yen has been a technical trader's dream lately. I wrote about this one a couple of times last week, noting the potential for this inverse head and shoulders. So notice how ever since the pair broke below this 109 level, it has formed this inverse head and shoulders. And last week I wrote about the pair when it was right above that 106.80 support level. So notice how 106.80 supported the dollar yen back here on this candle. It then flipped to resistance and once again broke above it and then acted as support. I also wrote how the dollar yen needed to close above that neckline. So last week I said that a daily close above the neckline would confirm this reversal pattern and also expose that 109 level. So Friday's candle appears to have done just that. But here is something to keep in mind for the week ahead, and that is this neckline. The location of this could either be here where we include this high right here. So we have this high, this one, and this one, or it could be drawn this way where we simply include the upper wick on this candle and this one, but we exclude this high back through here. So there are really two ways to draw this level, and it's all going to depend on how the dollar yen reacts to this neckline. So whether or not we see buyers come in at this area up around 108.30, or if we see the dollar yen move as low as 108 and buyers step in through this 108 area. But here's what you don't want to do, in my opinion. You don't want to draw the level up here and then see the dollar yen close around 108 and think that this is a false break and try to short the dollar yen for a move back to 106.80. And the reason you don't want to do that is because, again, what if the level should be drawn like this and the key level is closer to 108 than 108.30? So if we get a close right here and you think it's a false break because of how I just drew the neckline and short it, well, guess what? The pair is still above that potential support level. So as long as buyers can keep prices above that 108 area on a daily closing basis, then I have to respect the potential of this inverse head and shoulders, which calls for a move up to that 109 resistance level. A daily close above that would expose 110.60. And again, the measured objective here comes in just above that 112.15 region. So notice how we have these two swing highs back through February and April. On the flip side, a daily close around 108 or just below it, so right below Friday's low, would re-expose 106.80 and also potentially negate this bullish reversal pattern. But again, as long as the dollar yen is above 108, I have to respect the potential higher up toward 109 and perhaps 110.60 with a measured objective around 112.15. Next up is the euro against the Japanese yen. This is one that we talked about several weeks ago, and I wrote about it when it was trading back at this channel resistance right through this area, and I noted that a break higher would expose 121. However, notice how the pair never did actually close above that resistance level. Instead, the euro yen sold off all the way down here, but last week, notice how it formed a higher low. So we had this swing low followed by this higher low just last week. Now look what happened on Thursday. Notice how the euro yen closed just above that channel resistance. So again, it served as resistance back through this area, triggered this move lower, formed that higher low, and then on Thursday it closed right above that channel top. That triggered Friday's rally up above 119.20. Now at first glance, 119.20 may not seem that significant. However, look at these two candle closes. Again, I'm on the daily time frame. Notice this close and this close right at the 119.20, maybe 119.25. So we could see one of two things happen. I do think that these highs right through here, so right around Friday's high, this area is going to attract sellers. So right below that 120 handle, I do think it's going to attract sellers, which could trigger a rotation into 119.25 this week. Now, there's also the chance that we see a deeper pullback and a retest of that former channel top. However, if we do see that, that would also erase most of last week's gains. So I wouldn't necessarily want to see that if I'm looking to buy the euro yen. Instead, I would like to see, again, a higher low. So we had higher low back here. I would like to see a higher low form right around that 119.20 area. But that doesn't mean that we won't see a deeper pullback. So that is something to keep in mind as we move through the week. A push through that 120 area would expose 121. So this is something I wrote about several weeks ago. And notice how this is another case where the daily time frame, it gets a little messy around 121. So notice this price action through here, and you may be questioning, well, should I draw the level at these lows or should I draw it higher up? And this is when I like to go to the weekly time frame, because notice how clean it is on the weekly. So if I draw that level right around that 120.90, maybe 121, notice what happens. Notice how we have these lows right through this region, and look at how it even supported the euro yen on these two candles. It then broke below it on this large bearish candle. Okay, so 120.90, maybe 121 is going to be a key area to keep an eye on if the euro yen can move higher. Now, another trick that you can use following this break is to use, once again, a channel. So if I draw the lower level to include these two swing lows right through here, and I then drag that upper level to include this recent swing high. All right, so we've got these two lows right here, and we've got this swing high. Now, this is something you can do for every breakout from a descending channel like the one that we've had recently. So on the breakout, you can draw the lower level from the two swing lows, connect it with that swing high, and now we have this ascending channel that we can use as a guide as the euro yen moves higher. But for the week ahead, I do expect sellers to come out and try to push the euro yen lower while it's below some of these recent highs, just below that 120 handle. However, I do also expect buyers to try to defend 119.20 based on these two candle closes. A move below that would re-expose this confluence of support down here just below the 118 handle. However, a close above these highs through here would expose that 121 region based on these lows through here, as well as this breakdown. The Canadian dollar versus the Japanese yen, or CAD yen, is one I haven't talked about recently because I haven't had a clear sense of where the pair was going. However, last week's price action, in fact, the price action here since about September, has created a unique opportunity in my opinion. So notice how we have this descending channel that formed and last week broke out. So again, just like the euro yen we just looked at, notice this swing low and we then had this higher low. So based on Friday's close above this channel top, I would say the CAD yen is ready to move higher, perhaps up into that 83.20 level. Now, there's also the chance you may have noticed as I drew that out that just like the dollar yen, we could have a potential inverse head and shoulders on the daily time frame. And again, Friday's close did confirm that reversal. So based on this price action, I would say the CAD yen is ready to move higher up toward 83.20. And one horizontal level I would keep an eye on if we don't get a full retrace back to that channel top would be right around 81.80. So notice how we have these highs, and then we also have several highs through this region back in May and June. And then we also have this swing low back in March. So I would keep a close eye on this area early this week to see if buyers can come in and prop the CAD yen up. And again, if they can, I do think a move up toward 83.20 could be in the cards for the Canadian dollar versus the Japanese yen. And while it could take several days, if not weeks, a close above 83.20, so this resistance level up here, a close above it, could trigger a move up toward 84.20 based on this swing high. And next would be 85.20 based on this upper wick through this region. Now, the reason this inverse head and shoulders becomes really interesting in my opinion is if we take the height of this pattern. So I'm going to go ahead and get rid of this channel and draw a neckline along this area. So the slope of the neckline is pretty aggressive here. However, look at what we're dealing with on the weekly time frame. So notice how we have this broader descending channel based on these two swing highs and these lows back through here. Now, keep in mind that this is also a multi-year channel. Okay, so look how choppy the Canadian dollar versus the yen has become. However, notice that the last touch off of this broader descending channel was this low. So notice how we had this swing high, the pair moved lower to this swing low, it then moved back toward the channel top, formed the swing high, moved back toward the channel bottom, swing low. So if we do see a push higher, I would not be surprised to see the Canadian dollar against the yen up around 85.20, which again would be a move up toward that channel top. And if that wasn't enough, let's take a look at the inverse head and shoulders and figure out what the objective of that pattern might be. Now again, this neckline is a bit steep in my opinion. So we've got this high as well as these two back through here. Now, if buyers can step in and prop the CAD yen up above that neckline, so here's the inverse head and shoulders pattern that we're working with. This pattern has approximately a 400 pip height. So notice if I drag from the lower wick up to that neckline, it's about 390, we'll call it 400 pips. And we measure higher from Friday's breakout up toward 400 pips. Guess what we get? 85.20, which is this top right back here. So 85.20, and look what's just above that. This is that descending channel top that we just looked at on the higher time frame. Of course, there are no guarantees for the CAD yen or any currency pair I discussed today. There's always the chance that we could see a false break. So there's a chance that this Friday candle could be nothing more than a false break, and we see the CAD yen just crash this week, close back below this level, and then trend lower still. All right, so there are no guarantees in this business. However, we also have to work with the price action in front of us. And right now, I have to respect the potential for a move higher as long as the CAD yen is above this area right between 81.20 and 81.80. So if buyers do come in, prop the pair up, I do think a move up to 83.20 is in the cards with a break above that exposing 84.20. And again, the measured objective for this pattern is right up around that confluence of resistance just above that 85.20 area. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.